By now, you must have realized the importance of working capital and how critical it is to ensure the smooth operation of your business. I think we should dive deeper now to understand how to estimate the working capital requirements for your business, for which understanding the concept of an operating cycle is going to be very important.
One easy way to understand the working capital is to compare this to a wheel. At the beginning of this wheel is cash. Cash rotates with the purchase of raw materials by paying cash or through credit from suppliers. Then, the raw materials are converted to work in progress and then to finished goods through value additions by adding employee cost, power, consumables, tools and also technology. The cycle moves on to the next stage where the finished goods are sold to customers on credit or for cash. The cycle ends with cash where the money is realized from the customers at the end of the credit period. Another way of understanding working capital is to view it as a cash machine, like an ATM. Some money is stored in the cash machine, which is called working capital. Cash is drawn out of this machine to pay suppliers of goods and services and also for purchase across the counter, which is cash purchases. Further, cash is drawn for payment of salaries to employees, to pay for power or electricity, to add value to the input material by using fixed assets. The cash machine is replenished with cash collected by selling the finished goods either across the counter, that is cash sales, or from customers who have been extended credit. It will be useful to know about the length of the operating cycle, which is normally expressed in number of days. In retail industry and restaurant business, the operating cycle is very short, maybe a few days or even just one day. When the inputs are converted to finished goods, in the case of restaurant it will be food, and sold across the counter for cash. Hence, the working capital required is lower. On the other hand, some capital goods industries like building power plants have longer operating cycle extending to several months or even a year. Customers will only pay after the power plant is commissioned and fully operational. Hence, working capital required is higher. Irrespective of the length of the operating cycle, care should be taken to keep the pipeline in efficient condition. We will discuss more about this later on in the section on working capital management. As an entrepreneur, you should be able to estimate the working capital requirement for your business using the operating cycle concept. First, you will estimate the size of the income and expenditure for the year and the resultant profit. If you are a startup, you should be able to compile this information from similar firms operating in the same industry and region. The next step is to estimate the average number of days of raw materials, work in progress, finished goods, receivables and cash required for efficient running of the business. This can be compiled from the published financial statements of other businesses or from industry associations. The key factor is to link each component of the working capital to an appropriate base. For example, for estimating the number of days of raw material stock, the base is the material consumption. Similarly, for work in progress and finished goods stock, the base is cost of production. For receivables, the base obviously will be sales because receivables is based on sales. Following example will give us more clarity on this. Dilip is running a garment business. The projected income statement of his business for 2016 is visible to you. Assume 360 days in a year and all the amounts are in lakhs. Raw material stock is equal to 45 days. Work in progress, as you can see there, is 10 days. Finished stock is 6 days. Receivable 30 days and cash requirement for the business is 5 days. We need to estimate the working capital requirement for this garment business. You can see that the money value of raw material to be used in the year is 2,400 lakh rupees. If a year has 360 days, then for 45 days the monetary value of raw materials to be kept would be 300 lakhs. Similarly, the money value of work in progress to be used in the year is rupees 3,600 lakhs. If a year has 360 days, then for 10 days the monetary value of work in progress to be kept would be about rupees 100 lakhs. Likewise, we can find out the value of other current assets. For finished goods, it will be rupees 60 lakhs, for receivables, it will be 500 lakhs, and cash, it will be rupees 75 lakhs. The total requirement of working capital thus will be rupees 1035 lakhs.